Everybody, good morning. Going to be an early day today. I'm going to do a video real quick. Let's go over crude oil, the last two trades. Phenomenal morning already on crude and gold. Crude's getting a really nice push. Hey, Mats. Let's go over crude real quick in the setup. We have three charts. Hey, Sainu. We have three charts we look at in the trading room. You can put these on your own NinjaTrader and trade any market the same exact way. We had a huge short in the S&P 500 on that setup yesterday, over 10 points. And I'm going to show you today's setup here in a second. But what we do, we have a black chart over here, and we have a white chart. The black chart is support and resistance, and so is the white chart. The gray template in front of you is market delta. That shows us the order imbalance once we're on support and resistance. So the methodology is very simple. We use market profile that's worked since 1985 to find our support and resistance. It called the high, both highs here. Here's our last trade setup. It called this perfect high, like a lot of you traders got in that were typing in the room. You had this runner running. That's a perfect sell setup right at the inflection point, high inflection point. The cool thing about market profile, I have two market profiles on this black chart. I have a more volume-based profile and a price-based profile. The volume-based will be these solid lines. The price-based will be more in these dashed lines. The solid lines, the blue's the control point. The HVA is high value area is red. Low value area is green. Very simple. Control blue, high value red, low value green. What we like to do when we first log in, we don't use moving averages for support and resistance, but we use them because they don't work well in support and resistance. We use them for trend direction. When you first log in, you look at this black chart, you have to identify if you are in a trending market or in a chop market. If you are in a trending market, there will be an angle on this moving average, this magenta moving average, this pink moving average right here. It will be angled down if you're trending down. It'll be angled up if you're trending up. It'll be flat as a pancake or sideways if you're in a flatter range market. If you're trending down, we sell retracements. Our job as traders is to sell retracements. That's the first order of business. I do not look at market delta first. I don't look at my Fibonacci retracements over here, and I don't look at market profile over here before I look at the trend. I need to establish, I ask myself right when I log in to any market, am I trending down, trending up, or am I sideways? The market can only do two things. It goes sideways or it goes vertical. Typically, on an average trading week, you'll get 3 trend days and 2 chop days. Chop days, I'll show you how to trade in a second. We traded that yesterday on gold, and it worked out perfect for a huge hit. On trend days, it's very simple. If you are angled down, that longer moving average angled down, you are going to sell retracements. Now, my methodology is very simple. If I'm trending down, I want to sell high value area. High value area is going to be red. Red solid line, red dash line. On this black chart, if I come within 2 ticks of this dash line or solid line, I want to look for negative market delta right here. Negative market delta to close red. Anything over 200 on my market delta, I use my proprietary Renko bar. Anything over 200 is a major sell imbalance on crude oil. I was 253 at this exact inflection point. Now, we do not buy low value area. This is low value area down here, the green dashes and the green solids. Solid volume, solid green. That's for amateur traders that do not know anything about price action on market profile. We do not buy low value area in downtrends. We look to let low value area break through, let it retest, and then we'll look for another short opportunity coming up again. So our methodology is very simple. If I'm in a downtrend, I sell high value, and then I let low value area break retest. You can also trade off the control point. This is another sell setup. If the control point breaks and retest, you break through, you retest. Here's another trading opportunity if you wanted it. That is a trade signal to go short. The control point is the most volume, the solid blue line, the most volume that's been trading in crude since 1:30 a.m. this morning. All right. So if you're in a downtrend, you notice it nailed the high up here, it nailed the high here, and it nailed the high here. These are all inflection points with trend. So what we do is we use the black chart to find the trend, our black market profile chart. It has volume and price on it. And then we look for retracements. And once we get when 2 ticks at these support and resistance levels, we look for market delta to close red. Now, once market delta closes red, you can open the position up, place your stop 2 ticks above that swing high. That's the stop loss. Look how that stop loss is placed right up here. Very limited risk on my trades. All right, I don't risk more than a 15-tick catastrophic stop on gold and crude. It moves within 100 ticks per dollar it moves. Like the crude moves $1 per barrel, 44, 45, 46. In between those dollars are 100 tick increments. With each tick is $10 a tick. We don't risk more than $150 or 15 ticks on any given trade. So this had a maximum risk of 15 ticks going into this trade, this last setup, maximum risk of 15 ticks. But then once we enter our order, you can place your stop 2 ticks above that swing high above market delta. That's going to bring your stop down to an average around 12 to 13 ticks per trade. So you're risking on this last trade setup $120 to $130 per one contract. It's got as low as 44.35. Your fill up here was just above 65, so 66. So that's the profit potential with low risk that you got already. It's been negative market delta all the way down. So why do I use this white chart right here? Why do I use this white chart then? The white chart gives me confluence. The unique thing about my trading system that there's no other trading system out there that I've seen ever that they do this is I use 3 different market profiles. I use volume profile over here, the solid blue, red, and green. I use price profile, which is more the dash line, more price-based. And on my white chart, I use developing profile. As price ticking along, it's actually looking for support and resistance. So what happens is when the white chart agrees with the black chart, I get major confluence. Now my white chart, we call it J signal. It's unique because it looks for Fibonacci confluence on retracements. Now the easiest way to trade the J signal is I got low value in green, I got high value in red, just like the black chart. High values in red, low values in green. The easy way to trade the J signal is very simple. If I break down through low value, the market has weakened. I look for the first retracement to go short. If I break through low value again, I look for the first retracement to go short. If I look at market delta with these Fibonacci retracements, look how market delta called the high on each one of these retracements. There's your retracement. There's market delta that called the high, stop loss 2 ticks above the swing. If I look at this retracement, the second retracement, broke down through low value, the market weakened, look for the first retracement. There's market delta that called the high. These is 2 for 2 on my J signal chart this morning so far with market delta. Now what's unique about this is look how it matches up with my black chart. This Fibonacci retracement and this Fibonacci retracement, these red dots, these are Fibonacci confluence retracements. They matched up exactly where my profile was on my black chart. So that is ultimate confluence. I'm getting 2 different strategies that are reading each other at the same price point in time to go short. That's ultimate confluence and your ultimate setup you're going to get in this room because you're getting confluence over here. This is breakdown retest of low value area on this one. Break retest. Remember, we don't buy low value in a downtrend. We're smarter than that. We're more educated than that. If we're trending down, we don't buy low value. We sell retracements. We let low value area break. We let it retest. Now look at this. Actually, the high value right here, volume profile, was on top of this also at the same time. This is 3 times confluence. I got to break retest of low value, high value, and look over here. Fibonacci retracement. Look at my next Fibonacci retracement right there. That's a retest of high value area within 2 ticks, but at the same time, I got my Fibonacci retracement also. Look how my market delta called it also. So that's how we trade, okay? We let these 2 charts, the black chart and the white chart, they work independently, but you can trade them together, okay, for confluence. Go to gold, Gerald. If you look at gold, we take a look at gold. Gold right here was in a downtrend, flattened out a little bit. We saw the first test of high value area. Look how market delta called the high again. Negative 60, anything over 50 on gold is a huge sell imbalance in my room. Negative 60 right at the high. But take a look how the white chart and the black chart played with each other. Here's high value area. My high value price profile, 1310, almost called the high to the tick. Consequently, look at my J signal chart. Look at my high value area over here. I'm at 1310 also. That's 2 times stacked area. And look at this, negative 60. Negative 60 right there. Great sell. I teach traders to look at gold and crude pre-market. We have unemployment claims that just came out just now. Every Thursday at 8:30 is unemployment claims. You get pre-market moves before the news even comes out, so you don't have to risk money holding into news. So this is a pre-market trade at 7:40 this morning. So 7:40 this morning is a pre-market trade to trade gold from 7:40 all the way down to 8:26 before news is released. This is all profit potential right here. Same thing. What you want to do is have a hard catastrophic stop of 15 ticks. 15 ticks will be above. 15 ticks is the maximum risk. Then you put your stop loss 2 ticks above the swing high. There's your swing high. Okay? Look how the market moved all the way down pre-market. Now we're looking for another continuation setup that's going to continue with the break retest, a possible LVA coming up right now also with post-news. So you can trade pre-news and post-news. Now, Gerald, go back to crude if you can. What I want you to look for is I want you to look for break retest of profile. Now, if you look at crude right now, we've not had one positive market delta. There's not one positive market delta yet on crude from this sell setup. Look at this. Sell, 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 sell bias, sell bias. Not one. Not one on this last sell setup. So we use the support and resistance levels or these stack levels, stack market profile levels. Now these solid lines over here on crude will move with price and lock themselves in. When they lock themselves in, you want to trade market delta off those locked in prices. The accuracy is phenomenal when you look at the locked in prices on this little guy. Now, if you look at the S&P, the same thing this morning. Here's yesterday's S&P. We broke down. We were in a downtrend, so you don't buy low value. You're smarter than that. I educate you better than that. You break low value. You retest. It broke through low value, high value, and also the control point retested. This is my level yesterday I gave traders in the room. 73 to 73.5 break retest. Look for the breakdown. I was exactly correct. It broke down. It retested later in the session around 9 o'clock. And look at that trade setup. It just plummeted from 73. 73 all the way down to 60, 13 points over 13 points. It eventually broke the control point, retested, gave you another opportunity. If I look at today's action, I'm looking for the same thing. What I want crude to do, I want it to break through 72.25, retest at 72.25, and I'm going to try to get down to 66. Okay, 66 would be my 5-point target. So that's what I'll be looking for in crude. So yesterday, when I was right here, I said, yesterday I was right here. I was in between high value and low value. I said, guys and gals, if we break through this 73.5, we retest, look for a short. Sure enough, broke through, retested, see you 13 points. If it would have broke to the upside, HVA, break out, retest, look for the long. Don't make it any more difficult than that. Now today, I'll look for the same thing. I'll look for a breakdown, retest, 72.25, 72, 66 target. All right? That's how we trade the system. Very, very simple. Gerald, go back to gold. Last one. If you look at gold real quick, if you look at gold, we have the move. Look how the high value can call the market. I mean, this is just phenomenal trading when you can call these spots. This has worked since 1985, guys, over 31 years. Do you think it's just by chance that it stopped right at a high value area? You think it's just by luck it stopped right there and over here on crude oil? It's called order flow. It's a big hit, 1310 all the way down, almost a 1305. That's almost a 100-tick move. Almost a 100-tick move and market profile called the high again. You got to put your money at risk, right? You got to put your money at risk when you have a high probability of success. Do not put yourself in a position when you risk money, all right, if you're going to put yourself in a position to lose. put yourself in a position to win. You got to do it on market profile. So we let market profile set it up on the white and black chart, and we use market delta to pop in the chart with low risk. Okay? Sure, I'll go back to crude one more time. So crude, right? We still got the runner running because there's no what? No negative market delta, no positive market delta yet. Look at this, all negative market delta. This is a cool thing about market delta before I shut this video off. On this sell setup, negative 253 market delta at this key inflection point, have my Fibonacci dots, had my HVA. All right. If it would have closed green at the next bar after entering right here, if I would have closed green right here, if I would have closed green on positive market delta, you take a small loss. You take a small loss. That's the difference between us trading and amateurs trading. We're professional traders that know exactly where to buy and sell with market delta and market profile. We got the edge, but you got to make sure you watch market delta. Are going to be just like everybody else, right? We got to let market profile set it up, and then we let market delta pop us in the trade.